Hey guys, what is up? Welcome back to my Robinhood portfolio. And ending the trading day here on Monday, you can see I'm in the green, up about $48. Overall sitting almost right at 71.70. As a whole, the market was up. As I go through my holdings here, you can see mostly green. A few stocks were down. AMD was down just a little bit here today. 1%, only have a few shares. So overall still up about $1.59. The Guggenheim bond fund was down a bit as well, but again, if I look at the total return, still up a bit here, so really haven't lost any money. The big change from last Friday is I went ahead and I sold my large stake in the BlackRock Income Trust, an investment grade bond fund that I had bought early on when I initially started investing with Robinhood. For whatever reason, that price had popped up to about right where I had bought it for, and with the dividend payments, I made a nice little return. So I went ahead and liquidated that. And then now I'm kind of sitting with a little bit of extra capital here. And what I've been wanting to do for a while is trying to put together a collection of bond funds that would have distribution dates throughout the month. So one would pay at the beginning of the month, a couple would pay throughout the month, about a quarter of the way through, 3/4 of the way through, and then one at the end of the month. And that would give me a little bit of room to kind of play around, maybe buy and sell some of these bond funds when they go up and down, and try to capture some of the dividend payments. I know this is probably not the preferred strategy for a lot of long-term investors, as you incur quite a bit of tax penalties for doing that. Essentially, making that dividend income, but having to pay that at the end of the year rather than kind of holding that for a longer period of time and paying a better tax rate for doing that. But I thought it'd be fun, kind of put together a series of bond funds here that would have ex-dividend dates throughout the month. And just to remind you guys, and myself actually, being a new investor here, so the ex-dividend date is the date at which the person owning the stock would get that dividend payment. So, for example, if a stock had a dividend payment of 9/1 or September 1st, you would essentially want to hold that stock August 31st or the day prior to that. And then on the 1st, you could sell that, but the dividend payment would still go to you. It would not go to the buyer, to go essentially to the seller. And at that point, you could go ahead and, like I said, sell that stock. You'd still get the dividend payment and maybe buy another bond fund that has a dividend date, or ex-dividend date, excuse me, a little bit later. So, like I said, I put together a few stocks here that I might try out this strategy. Not sure if this is going to work. As always, any input into this strategy appreciated. And again, I know this is probably not the best for tax purposes, capturing dividends and then going ahead and selling the stock right away, rather than holding it for a period of time. But again, the whole point of investing in Robinhood is to have a little bit of fun. So let's kind of go ahead and look at some of the stocks I picked out. And again, just to remind you, and again myself as well, what a bond is, it's essentially a loan or IOU, or you're the bank. You're essentially a loan to a number of different entities. It could be governmental, different city, different company. So those are essentially the major ones: government, cities, and companies. They essentially hold that bond, and at a regular interval, the company, the city, the government will be paying you back a certain percentage rate. It really depends on what their credit score is. So, like I mentioned, that BlackRock Income Trust, it was essentially investment grade bonds, so AAA bonds. The percent of the overall return was lower, but again, they were very safe bonds. So the monthly dividend was low, 5%, but very safe bonds. On the other side of that, you can have monthly dividends of 15% or higher, but those are junk bonds, and the credit worthiness of those companies are a lot lower. So a little bit more risk involved there. So I want to take a look at 4 different companies, and these companies will have ex-dividend dates throughout the month, one at the beginning, a couple during the month, and one at the end of the month. And again, this is kind of to capture those ex-dividend dates, capture those dividend payments, and then that stock is about the same or higher than what I bought it for, I'd go ahead and sell that stock and then buy the next income or next bond fund down on my list and capture that dividend date, and kind of just keep repeating that throughout the month. And capturing dividends there for a nice little return. Again, not sure if that strategy would work or not. There's some tax penalties for that, but again, kind of playing around. I thought it might be fun to kind of do that. So the first one I want to take a look at goes by the ticker symbol ANGL. Let's kind of bring that one up here. And there we go, ANGL right in the middle there. Market Vectors Fallen Angel Bond Fund. So this is essentially a collection of bonds that were at one point investment grade, but for whatever reason the company or the city, the governmental entity, typically with corporations, their credit worthiness fell and those bonds were degraded. As you can see here, the dividend yield is 5.2%, and this one has an ex-dividend date at the beginning of the month. So for this particular bond fund, I would buy this at the end of the month to capture that ex-dividend date, and then sell that for my next bond fund. And overall, you can see for this particular fund, it's been trending up a bit here, a little bit of volatility over the last 5 years, but again, bond funds are a little bit displaced from the volatility in the market typically. So this would be one I would buy to capture that ex-dividend date at the beginning of the month. The next one here goes by the ticker symbol BKT. This is actually the one I had just liquidated and sold. BlackRock Income Trust. So this is an investment grade bond fund. You can see my last dividend payment there on the bottom. A little bit lower dividend yield at 4.8, but the ex-dividend date is the 11th of the month. So this one I could, again, hold that on the 10th, maybe sell that on the 11th or after, and then capture that dividend payment. This has been fairly stable here over the last 3 months and year. Again, bond funds are stable overall. The next one I want to take a look at goes by the ticker symbol HYLS. First Trust Exchange Traded Fund. Here you can see the dividend yield. Again, is 5%. This is a stock that has a good collection of bonds that are near investment grade. Not quite as good as that BlackRock Income Trust, but the ex-dividend date on this one is the 21st of each month. So again, I could liquidate my other bond funds, buy this one on the 20th, and sell this on the 21st, capture that ex-dividend date, and buy the next fund on my list here, which goes by the ticker symbol of HYLD. And this is a little bit higher risk here. It's a high yield ETF, so junk bonds. Dividend yield is 7.3. So the credit worthiness of these bonds is a little bit lower, as you can see reflected in that higher dividend yield. But the ex-dividend date of this one is at the end of the month. So again, I would buy this before that ex-dividend date and then sell on or after, capture that dividend, and then go back to the first one on my list, which was the Fallen Angel High Yield ETF. So again, a collection of 4 stocks there, ex-dividend dates throughout the month, with payment dates as well throughout the month. So the whole idea would be to kind of do a rotating buying and selling of these bond funds, capturing that ex-dividend date, capturing that dividend, and then buying the next one down the list. I know for long-term investors, they're probably not looking highly on this strategy. There's a lot of tax consequences for doing this, and also if some of these bond funds were a little bit more volatile, if they went down, I couldn't sell, and essentially I would be kind of put on hold for that month, so I wouldn't be able to sell that bond fund and go to my next one. But just kind of thinking of investment strategies, that one was a strategy I was looking at. Not sure if I'm going to do that, but it kind of appeals to me. I'm not sure if I really want to go into a lot of high-risk investments here. I've been kind of playing around, but as I put more capital into my account here, I kind of want to have some investments which are a little bit more safe. So I would like to have a little bit invested into bonds and bond funds overall. Like I said, bond funds are essentially ETFs, diversified bond funds, so I'm not buying individual bonds. They're pretty easily liquidated, bought and sold. So I don't know, tell me guys what you think. Is this a good strategy? Is this just kind of a waste of time? I'm sure there's probably better ways of doing this, but again, playing around, having some fun. Kind of thought about maybe doing that for a few months to see what kind of returns I could get. So yeah, overall up a little bit today. Putting together a nice streak here, about 6 or 7 days of being in the green, kind of inching back some losses I had made with that speculative play on Portola and Pfizer. So looking good overall. As I say every video, if you liked it, go ahead and give me a thumbs up. Leave a few comments. Subscribe always helps me out. And again, if you guys have any comments for some stocks I should buy here, let me know. I'm looking for stocks to adding to my portfolio. I'm always looking for stocks that have a nice little dividend yield associated with them. But I'm looking for any stocks if they're good investments. Tell me why you think they're good, and just alert me to what's on your radar as well. So until next time, we'll see you guys later.